So this is the next lesson of chapter 3. I think this is lesson 7, right? This chapter is going to be, there's going to be some more teachings and it's going to be more longer than the previous chapters just because this is really the crux of what you guys need to understand and blend into your trading. So right now, as of this chapter and what's been inside of it, we've considered the time of day, the day of the week, weekly expansion, and now we're going to consider the sessions, right? So we've considered one session already, and that's been London session. And from your notes, you'll see that London session is usually a protractionary phase that is opposite to the actual move of the day, right? So that brings us on to the next session, which is the New York session. Now, New York, right, it can do one of two things. And this is where understanding premium and discount and understanding that PDA matrix is going to come in. And it's going to help you frame the day, given the news events and whatnot. New York is either gonna continue London's move after the Judas, or we'd want it to reverse. So let's consider the one where it continues, the move away from London's Judas. Right here, right, this is the day of this is the 16th of June, so this is last week's price action. On this day, right, on this day, what did we have? This is the midnight price right here. We had a run above this high, right? Optimal trade entry from this high to this low. That was London's protraction. Look at the time that is on here with the minutes, yeah? That's 3:30, 3:45. Now we're coming down 4 and 5, right? 4 and 5. Now, then we got this move down, and this is the time that we're going to consider for the New York session. The time for the New York session is 7 a.m. to 10 a.m. to New York time, UTC -4. If you haven't already, do put your time to New York because there's some people that have been doing the homeworks and their time wasn't to New York and they've been using the midnight price of London time, which is going to give you completely wrong results of the homework. So please do put your time to the New York time. So you see London went higher in the first half of the session, right? Look, 3:30. That is midway of of the London session, right? From 2 to 5, an hour and a half in is this. And then we fold down lower. Now, when your bias for this day was bearish, right? Because if you were bearish for this day, this run up is expected, right? This run up is expected, and then you want to move away from it. When you see this, this is a good sign that, okay, I'm likely to be on side for the day, right? London offered the move into this discount of this OTE, and now we're folding over. Now, what is New York gonna do? New York, remember, can do two things. It's gonna continue the move that is away from the Judas swing of London, or it's gonna reverse. This is an example of when it continues down. And why did it continue down? This is the topic that you guys need to know. Really zone in on what I'm gonna say here. Whether New York reverses or continues depends on where price has traded to up until New York given the PDA matrix. Let me give an example. London offered the move into the premium. So then now price using the New York session is going to move away from the premium to discount pricing. Do you see what I'm saying? If London didn't offer this, New York likely would have offered this, right? However, because London offered this premium and we moved down lower, New York is just going to continue this move lower because this has already been offered on the PDA matrix, right? If London trades into the premium, then New York is going to reverse off of it That's if the whole entire London session is used to trade into it. However, let's say this OTE was, way higher if I move this, right? If London doesn't trade into your interest of the higher time frame PDA, let's say that it's going towards a 4 hour fair value gap, but the London session hasn't is gone close to it, is close to the premium fair value gap, but it's not there yet. At the start of the New York session, you can expect to trade into that fair value gap quickly and then reverse off of it for the rest of the New York session. I'm going to show you examples. Let's consider this first continuation. If you see this day, it was a down close day. This is the high shown here, and this is the low of the day shown here. London session, right? So from here, yeah, just match up my cursor with the wick here, right? So from here to here was the London session, and you can see that it is the wick of the candle. It's the protraction of, it's the high of the down day. Now, this what I have marked out, right? This is the price of New York expansion in the New York session. So if we go here, this candle, right, it's a 7 a.m. candle, is here, and this is the low that was made in the New York session here at 9:30, and it was here. This was the range expansion. Of course, it offered this entire move. You could have held for that, but we're just considering the New York session, so we're not cherry picking, right? So you would have offered this move from here to here, and that's the expansion that New York tends to offer, right? Now it continued the move down. London went down, New York starts, traded higher, and then it folded down lower. It went down lower already because London offered the move higher into the PDA, the higher time frame PDA matrix. Now, if we actually look at today's price action, right? Let's look at today's price action. Let me just get rid of all of this. So this is another good example. This is where coming into the PDA matrix is going to help you frame the trades. So this was actually sent into the group chat on Telegram. We had this fair value gap here, and we're just, we're consolidating along here. So what can we expect? A dip down into this fair value gap, right? If I just remove this, you see this candle dips down into the fair value gap and we move away. But let's consider the time of day this is happening at, right? So if we go to the 15-minute chart, London session starts. London session is going all the way down here. London is trading into the PDA matrix. Now, look, London didn't offer a move away from the PDA matrix. In the last example, right? Let's see if I can scroll back to it. It was here, right? London at 3:30 here, and then we went down here. So we looked for continuation away from the move. But let's look at this example. This example, London used its entire session to trade into a higher time frame for our discount, discount fair value gap. So now what can we expect from New York? Well, on the PDA matrix now we're in a discount fair value gap array. We can frame a New York reversal. Now what happens? The New York session starts, right? Comes down and we traded higher, right? This is how you know what New York is going to offer. This is the best way to know what New York is going to offer, and you can also use this concept, right, of trading into the PDA matrix with the London session, right? Just for a brief reminder, because I don't want to make this video long, because the next lessons are going to be on blending both of them together, which essentially this has kind of done, but we're going to go in a bit more depth. And I'm also going to touch on when to not trade the sessions given certain things have happened, right? So if London trades into the PDA matrix discount and it starts to move away from it at the end of the session, it's likely that New York is going to continue on that rejection because you've already traded into your higher time frame, PDA matrix point of interest. If London uses this entire session to trade into it, then New York could reverse off of it. Now, let's give another example. Let's say here, yeah, just for the sake of learning. Let's say that this is the end. Yeah, this is 3:45. Let's say this was the end of the London session, but we're still not really in that fair value gap. Well, what can the start of New York do? The start of New York can quickly trade into the premium or the discount array that you're looking at, the higher time frames. And then in the middle and the latter end of the New York session, we can start to frame a reversal. It's all about when you trade into the higher time frame PDAs. That is the crux of your trading. This is why it is so important to understand where you are, premium, discount, and specifically what arrays are existing within the premium and the discount, because this is what's going to frame your time and price of the day. If London is traded into the premium, the PDA, you can look and hunt for reversals. If London trades into the PDA and then rejects off of it all within the London section, you can expect that continuation of London's latter end rejection of the PDA. This is how you have to frame it. This is how you frame your trading days. If you want to go a step further, you use what? This is what you use. This is what you use to understand when the move into the premium and the discount arrays is going to happen, right? If London, so let's say USD news is here at 10. That's 1 p.m. for us in the UK. If London is consolidating, right? It's consolidating, and let's say the bias is bullish for USD. If London is consolidating, just above a premium array, we can expect the New York quickly to dip into it, the discount array, and then reverse off of it. This is how you have to start framing your trading. It's all around the PDA matrix. You have to know where you are. This is what's going to help you be on side. The measures of protraction is irrelevant if you don't know, if you can't frame a narrative around it, if you can't frame it to run liquidity, if you can't frame it to trade into a higher time frame PDA. This is how you frame the sessions. Now, talking about the sessions, there's a specific time that I want you to consider. If you're expecting New York to reverse and you're expecting a, you want to frame a trade in New York, when you're considering to trade a continuation of London, right? A continuation of London is you need a retracement back up in order to continue the move down. Sorry, one sec. So let's say London moves down here For us to continue the move down here, we first need to retrace upwards, right? We need to retrace up, right? There could be a fair value gap in London. There could be some sort of premium array or something at equilibrium to frame a trade off of, right? So we trade back into London. New York can quickly offer a move back into the range of London to continue down, right? The time that this protraction in New York happens to continue the move down is usually around 8:30 New York time. Now, it doesn't mean it's exactly at 8:30. Sometimes it happens 8:15, sometimes it happens around 8:45. I say hunt the continuation, hunt the trade of New York from 8:30 to 9. From my back testing, from my experience, this is the time that the continuation is offered. Now, the same can be true if London trades, not into the PDA. So let's say if I get rid of this, let's say that London is going towards this discount array, right? This is the discount array, this trend line that I drew horizontally, right? So let's say it gets around here. New York can, trade into it and then start forming this reversal. This is the market structure shift when you go high, then you go lower into the discount array, and then you go higher than this high and you start to frame the trades there, right? The time that you touch the array to form the reversal, again, you want to see it happen around 8:30 to 9 o'clock. Most news events for the US economy come out around 1 and 1:30, right? That's why I say 1:30 to 2 o'clock, which is the equivalent of 8:30 to 9 o'clock in New York time, UK time. That's when you look to frame your trades. Now, if I get rid of this, and let's see this happen in real life. Let's get rid of this. So this is the move happened, right? This is what London traded down into for New York to reverse. Now let's go a step further, right? If I replay this. So you have a fair value gap from here to here, this candle, right? Now you see how this candle's low just sweeps this 1 hour candle's low, just sweeps it and it goes into this fair value gap, right? You could frame a small trade off of that. So if we go to the 1 minute, right? If I just actually do this, right? You see how, look, yeah? You see how we come, take out the low, right? Look at the time. Look at the time that I'm showing you guys. We're coming down 8:32. And this is today. This is not cherry picked. This is today. Look, you can see the 21st of June, right? 8:30, right? We come down and we go higher. And then we form this. You see this high to the here? Doesn't it look very, very familiar to, how do I go back? Oh, I can't go back, unfortunately. But doesn't it look very familiar to what I showed you with this example? At 8:30 this happens. This stuff is not by chance. It's algorithmically computed into these price feeds, right? This happens very, very, you know, it's not rare, it's very common that this happens. When you frame your runs into your PDAs, with the reference of time, that is opportunity in the market. That is where you hunt. And a lot of you guys are getting good at it. And a lot of you guys that I've spoken to, you guys may know some of this stuff already about the 830. You use it in your trading and you're doing well with it. This is the in-depth version about it. This is how you frame New York session. Everything about the New York session is in here. When to expect a reversal, when to expect a continuation, given what London does. Where are you on the PDA matrix? Consider these things. So that's it for this lesson. I'll catch you guys in the next one. There may not be a weekly commentary this week because I'm staying away somewhere. I will try my best to get it done. If I can't, I hope you guys can understand and I'll try to do something to make up for it. So until next time, guys, and I'll see you guys next time.